Welcome, everyone. Hello and good afternoon. Welcome to our Pitch Deck 101 webinar. And I want to say congrats to our members for signing up, because I always say life is measured by the amount of yeses and nos we say in our lives. And you're saying yes to stepping into a pitch competition, or at least considering it. So congrats to you. I am pleased and super excited that we have partnered with Zenagos. And they've offered to support our pitch competition this year by providing this training. And what Zenagos does is they support small businesses with access to high strategic consulting services, but at an affordable price. And they do it in the areas of hiring, retention, growth, and financial acceleration. Personally, I'm super excited to be working with them. As we were preparing for this webinar, I was impressed not only with the wealth of knowledge that they bring to the table and how super personable they are and professional they are. I felt we're in good hands. So I am going to hand it over to Karen. Just one logistical consideration. If you have any questions, comments, you can put them in the chat or the Q&A, and we have someone monitoring those. So we will raise them up to our presenter. So I'm going to hand it off to Karen.
Great. Go ahead and share my screen. Can everybody see that slide?
Yes, we can.
All right, great. Welcome, everyone. We are absolutely thrilled to have you here to talk about the pitch contest sponsored by the Massachusetts LGBT Chamber of Commerce. I'm Karen Baldeschwieler. My colleagues call me K14. I'm not a robot. One of the 4 co-founders of Zenagos. We call ourselves the Zenagos experts, and all 4 of us are here today. Incidentally, Mavis and I have been life partners for almost 40 years, and we married here in Massachusetts in 2017. Collectively, the 4 of us have raised more than $170 million as members of entrepreneurial leadership teams and have provided strategy and technical consulting to big companies like Walmart, Nestle, Coach, Fidelity, Land's End. But what we're most proud of is that we have started 17 small businesses between us. So now as Zenagos, we provide this blue chip consulting experience to small businesses at a very affordable cost, because we want other people to have the help that we wish we'd had back when we started. So just a few procedural things. First, feel free to engage in the chat. My 3 colleagues are watching the chat and may be able to answer some questions quickly for you on the fly. We have some time left at the end to answer some questions. So if you have a question, put it in the chat and we'll get to as many of them as we can. And then if you have questions that we don't get to answer, please connect with one of us on LinkedIn and say that you were at the Mass LGBT Pitch Contest webinar, and we'll post our LinkedIn links in the chat in just a second. So by the end of this session, you should have a clearer sense of how the pitch contest is structured and why. And you'll understand what the judges will be looking for. They will be playing the role of investors. So we're going to cover how investors think. And you'll also learn what the typical elements are of a pitch presentation and why you should include them. We're not giving out the slides from the presentation today, but we did make a super cool PDF that provides the tips for each of the 10 slides, some links to other sample decks that you can look at, and the chart of expected investor rates of return. So to get that, use your phone to grab this QR code and we'll email it to you. I think we email you a link and you click on that and it downloads. Mavis is going to put the link that this QR code represents in the chat also, just in case that's easier for you. While everyone's doing that, now is a great time to go to the chat and just tell us a little bit about you. So we'd love to know a little bit about what kind of business you're going to be pitching. So I'm going to just give you a minute to do that, get the QR code, etc. This says that chat is disabled. Is that?
Yeah, I'm working on that now. I didn't realize that it wasn't automatically set.
Okay. Well, then don't put what your company is in the chat just yet. And when we get that open, you can go ahead and do that. I'm going to go ahead and move on now. We'll put this QR code up again at the end of the meeting, so you will get a chance to grab that if you have been scrambling to get your phone right now. We're going to review how the Chamber structured its contest this year. So we'll do a little bit of level setting about how investors think, And then we'll review the major elements of a pitch presentation and suggestions for the kinds of things that you should include in your written presentation. And then we'll show you, if we get time, a couple of pitch deck examples, or maybe we'll use that time for questions. We're going to give you a special offer at the end of the session, so stick around for the end. Don't miss that. And we also have left a little bit of time to come up with anything to get to any other questions that come through the chat. So we should have plenty of time. We'll see as we get there. Let's start by making sure you understand how the Mass LGBT Chamber of Commerce has structured their particular pitch competition. There will be 3 rounds of competition. Any chamber member may participate in round 1. The first round is 100% written. So judges will read the submissions and choose some number of candidates to move on to round 2. Last time, about 6 people were chosen from a group of 27 to go to round 2. But the number of people who'll be invited is not predetermined. The number of people who advance is purely based on the judge's interest in the business. So they will invite as many people as they feel, are qualified for round 2. So that's really awesome. Round 2 is a live presentation by Zoom. So you'll have 3 minutes to present. The judges will ask you to show some slides, and then they'll ask you questions at the end. And they'll choose 3 finalists for round 3. Round 3 is in person, and no slides are allowed. 3 prizes will be awarded: $5,000 for first, $3,000 for second, and $2,000 for third. So everyone who's invited to round 3 will win a prize. Pretty cool. If you choose to compete, the chamber would like to make sure that you're available on November 29th and December 13th so that you can attend rounds 2 and 3 if you should be invited to them. And as you can see, each round emphasizes a different style of pitching. First, written; second, live with presentation; and then third, live stand-up with no slides. The chamber designs the competition this way to emphasize the importance of flexibility in your pitch preparation. When you're actually pitching to investors, every investor is a little bit different. And one of the things that you try to do when you're pitching to investors is to get a little bit of intelligence from anybody else who's pitched to them about what exactly do they look for, do they favor, because everyone's style is a little bit different. For today's webinar, we're going to prepare you for round 1. Remember, round 1 is written, and it should be a presentation of about 10 slides. The key is to create a presentation that stimulates the judge's interest so they really want to learn more. How do you do that? We need to cause one or more of these 3 thoughts in the judges. This business idea is compelling. I really want to meet this person, or I want to learn more about this. So that's what you're shooting for. How can you cause those thoughts? How can you achieve that goal? How can you get the judges to say, I'm really interested in this idea and this person, and I really want to know more? You need to start by understanding your audience. Because this is a pitch contest, it's a little different from a pitch to actual investors. So for example, at the end, you might win a prize, but nobody's going to ask you for equity in exchange for that money. However, it is meant to provide practice to prepare you for actual investors. Therefore, the judges will be simulating investors. So the judges are business people. They'll make their decision in much the same way that investors will. They'll choose the pitches that intrigue them, that make them say, I want to learn more. So for the rest of this presentation, I'm going to speak to you as if you were pitching to actual investors, even though we all know that you're pitching to judges who are simulating investors. Okay. Let's get in the mind of a professional investor. How can you get an investor to think, I want to meet you? Investors are looking for an answer to the question, how can I grow my wealth? That's their bottom line. In short, how can I use my money to make more money? Investors always assume that there's a balance between risk and reward. If they want a bigger reward, they have to take a bigger risk. So let's start at low risk, which is also considered low reward. So for example, you could just put your money in a bank account and get some interest. For the last 10 years, there's actually been very little reward for doing that, but it's completely safe. So low risk, low reward. Even if your bank fails, your money's safe. It's insured by the FDIC up to $250,000. we don't really talk about putting your money in the bank as an investment, even though you can make money with your money doing it. And part of the reason for that is you can just take your money out of the bank anytime you want, anytime the bank is open. So liquidity is part of the way that we decide if something's a safe investment, because if it's liquid, it means you can get it at any time. And so if it's illiquid, it's considered higher risk because it takes more time to get it back. You might need that money and you don't have it because it's in the investment. So we'll kind of draw a line between putting your money in the bank and the next level and say, when it's in the bank, we kind of consider it sort of sitting there, not so much an investment, not such a high reward. Investors consider the risk-free investment to be the 10-year Treasury bill. It's considered the safest investment because the U.S. government has always paid interest reliably. In fact, financiers refer to the interest rate of a 10-year T-bill as the risk-free rate. So it's considered so safe that it's basically risk-free. So yesterday, the 10-year T-bill was providing a 4.726% annual rate of return. That means that for every year you own that Treasury bill, you'll be paid about 4.7% interest on your investment. It changes every day. So you can Google 10-year T-bill right now if you want and see what it is right this very second. If an investor could get 4.726% totally risk-free, then they're taking a chance by investing in something that's a less sure thing. If they take that chance, they expect to make more for taking that risk. But how much more? This chart is based on our personal experience working with financiers and investors over the last 30 to 40 years. Investors can put their money in the stock market in stocks and bonds and make between 8 and 10% over several years with a balanced portfolio. Stocks are riskier than treasuries. So the value of a stock can vary widely. And as Fidelity Magellan fund manager Peter Lynch always famously used to say, it can always go to zero. So if you have a lot of capital or a great credit rating, you might want to go a little bit higher. You might want to go for real estate. The average return on U.S. real estate is between 9 and 11%. But this varies dramatically by region. It depends on exactly when you want to buy and sell. And as you know, you can have times when it's really hard to sell real estate because the market's down. So that's that liquidity issue coming back. If you're a wealthy investor who has more than $5 million, you can become an accredited investor and gain access to exclusive broker packaged options like private placements, venture debt. These products are riskier than stocks in one major way. They are less liquid. This means that you have to wait quite a while before you can get your money back. You may need to leave your money in a packaged product for 4 to 7 years, but then you'll generally make a return of 10 to 15%. So those venture capitalists that everybody talks about, they don't talk so much about the limited partners, which are the people behind the venture capitalists who are giving them the money so that they can give the money to the entrepreneurs. The limited partners are accredited investors. They're people who have at least $5 million and are deemed wealthy enough to be able to take the risk of that kind of a product. And they put their money into that fund and they promise that it can stay in there for some number of years, usually 4 to 7 years. But in exchange for that, they're expecting to make 10 to 15%. So all those entrepreneurial companies are generating that money for them. If you want to make more than 15%, then you're in the business of investing in private companies. So not everybody's allowed to do this. U.S. securities law generally does not allow you to invest in unregistered securities unless you're an accredited investor. But there are a lot of exceptions, and there are a lot more now than there used to be. So for example, crowdfunding is allowed, which, those investors aren't accredited investors. And if you're the founder, you can do it. So that's really the best way to do it. But it's risky to invest in a single company since a very high percentage of them fail. Most angel investors look for 20 to 30% returns annually. Big time investor funds like those run by VCs and private equity groups look for highly scalable projects that can make more than 30% a year and can do that within 3 to 5 years. So to do that, your company needs to get really big, really quickly. So what does this mean for you? Angel investors buy shares in individual startup companies, usually in the first couple of years of operation. They do a lot of work to find these companies and they take a lot of risk. So they expect 20 to 30% annual return and an exit, which means a sale or a recapitalization, which means that other investors buy them out within 3 to 5 years. So this table shows, and this table is in the PDF takeaway, so you don't need to copy it. This table shows how much money an angel investor would expect to take home 5 years later after making an investment of 100,000, 250, or 500,000 in a private startup company. So let's say an angel investor invested $100,000 and they wanted a 20% return over 5 years. Then they would expect to get about $250,000 at the end of year 5. That includes their original $100,000. If an angel invested $500,000 and they wanted a 30% return over 5 years, then they would expect to receive $1.86 million back by the end of year 5. So whatever you raise, you know that your investor expects to get 2 to 3 times that amount within the next 5 years. So a 20% rate of return means they would expect to get 2.5 times as much money at the end, and a 30% means nearly 4 times. So somewhere between 2 and 4 times is what they're trying to get. Just let's make this a little bit more visual. If an angel invested $250,000 and wanted 10% of your company, so this little slice is 1/10 of my total company, that means my whole company is worth $2.5 million because if that 250 is 1/10, then 10 times that is the value of the whole company, or $2.5 million for the whole company. Now, in 5 years, they want that share to be worth $750,000. If you go back to our chart, something like $750,000. So that means that your whole company has to grow a lot because it's going to have to be worth $7.5 million. So this that the investor wants to get means that this is what your company has to do. So professional investors expect a lot of growth. No pressure. So now that we know how professional investors think, we know that your presentation for rounds 1, 2, and 3 needs to include these things. First, in order to grow really quickly, the company should have a scalable business model. That means there's a way to grow revenue much faster than costs. And there's big enough demand that it could grow large. They want a credible CEO and team. That's because a more experienced team has a better chance of achieving all of that growth. They want a viable exit strategy. Otherwise, they can't get their money out. And what pulls it all together is a memorable story. Remember this, investors want to have fun too. They want to tell everybody else what they're investing in. They want to brag. They want to talk about why it's super cool. Practically, they also might want to bring in other investors later. And so that's a lot easier to do if there's a cool story to tell. Incidentally, when you're pitching to an equity investor, they also want a rational exchange of equity for their investment. So for example, when you watch Shark Tank and they say, I want $100,000 for 15% of the company, why is it 15% and not 10% or 20% or some other number? We don't have time to get into that today, but it's something to put on your list to learn about before you pitch to an investor who might give you a term sheet. Now, let's go over what to include in your written presentation for round 1. We'll start with the standard elements of a pitch deck. We suggest 10 standard slides. We'll go over each one to give you a sense of what to cover and what you want the reader to take away from each slide. This is our suggested sequence, which is all included in that PDF takeaway. However, this is just one framework for a pitch deck. There are many others that are effective. What matters most is that you tell your story in a compelling way that feels authentic to you. Feel free to subtract slides, add slides, change the order, whatever you need to do to tell your best story. The one thing we wouldn't recommend is to include more than 10 slides. If you can't tell your story well in 10 slides, it's not going to get better if it gets longer. So keep it snappy. Slide 1 is your introduction or cover slide. This is what the investor will see first. So it may determine whether your deck gets read first or gets put in the I'll deal with this thing later pile. Since a picture is worth 1,000 words, many people approach this slide with a big image. The idea is you can just get it in a blink. If you can achieve that with an image, go for it. So for example, you can put a huge Got Milk logo on your slide, or a gigantic image with a tagline like a diamond with "a diamond is forever." But whatever you do, make sure that your first slide describes your idea at a high level. You want your audience to take away this thought. Interesting. Tell me more. For our example, for the cover slide, we think an image won't do it. So we use words to communicate our idea. Zenapharm is a completely fictitious company that Zenagos made up as an example. Now, I've seen a whole lot of biotech and pharmaceutical pitches in my day, so I thought this would make a fun and memorable pitch. And there have been some recent articles in scientific journals that make it clear that something like this might be a real pitch someday really soon. So looking at this slide, do you get it? Do you get what Zenapharm does? What questions do you have right now about Zenapharm? What we're hoping our investors think is, interesting. Tell me more. They're probably thinking that can't be real, but what if it were? Slide 2 is the problem slide. What is the problem that you are solving? This slide should tell what pain you're solving or what value you're creating. People find charts convincing, so use data or examples to illustrate the problem whenever you can. Explain why solving this problem matters. It can be very effective to talk about why you in particular want to solve this problem. So for example, Sebastian Thrun developed Google's self-driving car project, and he explains in a TED Talk that he wanted to solve this problem because a close friend of his died in a car accident, and self-driving cars have the potential to prevent such accidents. So it's very moving and very memorable. So if you have a personal story like that, include that. After investors see this slide, you want them to nod their head and say, yeah, I can see how this is a real pain point. For our example, we use 4 charts. Here's our example problem slide for Zenapharm. This slide format is especially effective when you hand over a written presentation, which is what you're going to be doing in round 1. You can pack a lot of data onto one slide and tell a story, even though you're not there to do the voiceover. So here, the problem that we're solving is the growing cost of aging. We have 4 charts, and our story starts in the top left. As baby boomers retire, the population of workers declines, leading to a shortage of qualified workers. Now to the upper right, at the same time, healthcare costs will continue to grow as the average age increases. Now to the lower left, a smaller pool of workers also means that fewer tax dollars will be collected to pay for healthcare. And then finally, in the lower right, this is a growing problem, not just in the US, but also across the globe. And I've put numbers on so that I can kind of drive what order my investors, look at this slide. So this is a very effective tool when you're doing a written presentation and you aren't there to kind of tell the investors what your slide means. On to slide 3. So slide 3 is the solution slide. So now you've laid out a problem, right? Money for healthcare, the need's going to go up. I've got a solution. What is it? The main thing you need to do is highlight how your offering solves the problem. And you need to explain why your solution is superior to existing solutions. So don't forget, one alternative that people always have is do nothing. So a customer doesn't have to buy any kind of product. They can just do nothing. So do make sure that you've thought about, why does somebody really want my solution? Why wouldn't they just do nothing? After investors see this slide, you just want them to nod their head and go, that is different and better. So for our example, for Zenapharm, we use a side-by-side comparison. Here's our example solution slide. So Zenapharm's solution is a drug named Uvenix that reverses aging effects. The rodent on the left is elderly, the equivalent of 95 human years. On the right, the same rodent looks young again and tests at the equivalent of 25 human years. We've also added a couple of proof points, things that give our solution credibility. So the science is based on the work of a Nobel laureate. We included some technical information about adeno-associated viruses in case any of the readers have some technical knowledge. Investors often pass their pitch decks to subject area experts for evaluation. So if they're not sure about the science, they might ask a scientist to check it out. What we're hoping our investors think is that is different and better. Don't you want to be that happy rodent on the right? It's looking young and sleek. You want the reader to be getting really excited right about now. Slide 4 is the market opportunity slide. How big could this thing get? So the main thing you need to do is show the growth potential of your idea. People typically expect some kind of math on this slide. This is important. You want your math about the market size and your ability to penetrate that market to be realistic. Sometimes people will get into a pitch and they'll say something like, there are 8.1 billion people in the world, and if we only get 1% of them, we will have a massive market. And in most cases, that's just silly, and it will turn off your investors. So you want to narrow the market to something digestible, something reasonable. After investors see this slide, you want them to nod their heads and think, they made a really realistic argument for the size of that opportunity. So here's our example market opportunity slide for Uvenix. We believe, for Uvena Farm, the company, we believe that Uvenix, the drug, will be attractive to adults over the age of 50 because they are experiencing the effects of aging, and boy, are we ever, and they will be motivated to reverse them. So since this may be a discretionary purchase, because it might not be covered by insurance, at least in the beginning, we narrow our market to people with at least $75,000 in income. So we create a range from 7% of the population to 35% of the population. And we say, we think that we can hit the high end of this range if insurance covers the drug. So the 7% is the people who make more than $100,000. And the 35% is the people who make between $75,000 and $100,000. So there are about 6 million people in this group and 33 million people in this group. It seems like a pretty big range, right? So we give ourselves some credibility by putting in a comparison and saying 92 million people in the world take a statin, which is a drug that reduces your cholesterol. So that kind of grounds the numbers a little bit, because the investor can think, oh, well, 92 million people take a statin. Well, a lot more people are going to want this, right? They're going to want the fountain of youth. Of course they are, right? So we're hoping that our investor thinks they made a really realistic argument for the size of this opportunity. One important note here. If you use AI to create your images or to help you with the text in your deck, or even to make your entire draft pitch deck, make sure that you verify any statistic with multiple sources or with a very credible source like the US Census Bureau or the Bureau of Labor Statistics, because AI can provide incorrect numbers. So anything you stick in a deck for someone else to read, they can go look up. So make sure that you check any numbers. Also, be careful about putting your own proprietary information into an AI. So if you take your whole pitch argument and you stick it into an AI, you need to check the terms of use to make sure they're not just going to publish your pitch deck and give it to somebody else without your permission. So do be a little bit careful of AI. It's very, very new. It's okay at this point, by the way, if an investor is a little bit skeptical. When you size a market, you're always estimating. Everybody knows that. Slide 5 is the go-to-market strategy slide. So how are you going to get customers? This is a bit of a test to make sure you've thought through the hurdles of attracting customers. It's your opportunity to demonstrate some critical thinking, some business strategy savvy. The main thing you need to do is show that you have a reliable way of getting customers. After investors see this slide, you want them to nod their heads and think, they could actually do this. There are a lot of ways of making a go-to-market slide. Some people also call this the business model slide. So if you Google business model slide, you will find all kinds of examples. Look in the images, Google business model slide and check images, and just look at all the different ways that people present their business model argument. It's a really great way to get grounded in the different kinds of ways that people talk about business models, particularly if you don't have a lot of business experience. Keep looking at them until you find one that you feel like is the right way of explaining how you're going to get customers. All right, here's our example go-to-market slide for Uvenifarm. We've named 3 target markets for the sale of Uvenix. First, we're going to sell to mobility impaired through Medicare providers and daytime TV ads. We estimate that the customer acquisition cost is going to be $1,000. There are about 20 million people in the US, according to the National Institute of Health. That's a nice, credible source. And age-related mobility issues are going to be helped and perhaps completely reversed by Uvenix. Now, I know how to calculate customer acquisition cost, and numbers like that can be very convincing to investors because we're going to sell this solution for, $1,000 to $1,500 a month. And so if it costs me $1,000 to acquire a customer, I'm going to pay that off with 1 month of customer purchase. So that could be very effective, but maybe you're not a finance person, right? That allows me to show off my finance chops. You don't need to do that. Showcase your strengths. So if it's not finance, it's something else. But do make sure that any number that you put into your deck has a reliable source and that you can explain it. One of the ways that investors will test you is by asking you to go a couple layers deeper on any number in your deck. So if I say my customer acquisition cost is $1,000, I can expect, and actually I'm hoping that I'm going to get asked, how do you calculate that? Because that gives me an opportunity to show off, my business knowledge, right? So put something in there that's a little bit of bait, hoping that they'll ask you a question to go a little deeper and you'll be all ready to answer the question. Okay. We're also going to sell athletes through partnerships with big brands like Gatorade and ESPN, because we think that Uvenix is going to speed recovery from injuries. So about 140,000 athletes. I've used the census. That's a nice, credible source. Once we have some momentum, we're going to market this through partnerships. We think that's a customer acquisition cost of $800. I'm going to have a ball trying to explain that number to the investors when they ask me about it. But I also, to be credible, I'm going to need someone on my team who's actually sold partnerships or worked at these companies, because otherwise they're not going to believe that I'm going to know how to do that. So when you put something on, make sure you're thinking, what are they going to ask me about this? Finally, we're going to sell to celebrities who are interested in anti-aging. We think that this is a $13 billion market, Goop et al. But to attract celebrities, we need other famous endorsers. And so we're going to need some celebrities involved in our project as well, if not on the actual team, maybe as advisory board members or something like that. Okay, remember, when they're done with this slide, we want the investors to think they could actually do this. All right, slide 6 is the financial slide, otherwise known as show me the money. The main thing you need to do on this slide is demonstrate that you know how your business model works. After investors see this slide, you want them to think that's not only possible, it's probable. The numbers on the slide matter, but they don't matter nearly as much as your explanation of the numbers. If you're invited to round 2, you can expect some tough questions on the financial slide. If you don't make the financial forecast yourself, then you need to make sure that you understand it cold, so whoever made it explains it to you. Here's our example financial slide for Uvenifarm. We say we need $2 million to start the revenue engine. Now, this may look like a completely horrifying slide to you. If you're running a small business, you think, I'm going to lose $140,000 the first year. I'm going to lose $1 million. So there's a partial year here. I'm going to lose $1 million in the first full year. And then suddenly I'm going to make $42 million and 99 million. Woo! Okay. But if you saw this in a pharmaceutical pitch, you might not be quite as horrified, because that is that kind of losing a lot of money and then, explosive growth is actually a little bit more common in pharmaceuticals. Some people will pitch without a financial forecast slide altogether. So that's a risky play. I wouldn't recommend it unless you're going to argue that you're going to change the world with some amazing new thing. So you can really only baffle investors with BS when your idea is Uber or WeWork or something that really is world changing. The rest of us need to build our credibility by showing that we know how to make a financial forecast. It's good to forecast at least 3 years after whatever your current year is, because that's usually not a full year unless you're pitching on December, 15th. So you have to put in the stub year. It's this partial year is often referred to as a stub. And then you want 3 full years after that. Some investors like to see 5, but most of us know that nobody knows what's going to happen after year 1 anyway. There are lots of ways to show that these are projected numbers and not actual numbers. I have them labeled as EA for estimated actual. Other financiers prefer to see an F right here for forecast. Since the whole chart is labeled pro forma, which means forecast, you can also leave that off. It's, kind of a preference for, whoever looks at your numbers, but that's why that's there. Since this is a written presentation, you need to put your talking points on the side. Otherwise, they're just going to think whatever they think about your numbers. So make sure that you put what you want them to be thinking right next to your chart. If you have to make your chart a little smaller, that's okay. Just have fewer lines in your chart so the numbers are big enough for somebody with older eyes to read. If your investors are over the age of 40, they're not going to want teeny tiny numbers. That's an important thing to think about. Okay, so I want to point out that I've got an average price of $1,500 a month for my pharmaceutical. I've got patent protection for 20 years. That's a really important factor for protecting my revenue. I say my gross margin, which is here, is going to stabilize at 70%. That's a nice gross margin for a biotech company. So that's after the cost of actually making the drug. I still have 70% of my revenue left over. And then under expenses, I point out that our overhead is low until we receive regulatory approval. So we're trying to get an emergency use authorization. Now everybody knows what that is from the vaccine issues of the last couple of years. We aren't going to need to hire additional scientists, which could be very expensive. So that helps. So I'm going to point that out over here. And then we have a juicy distribution partnership with mythical pharma giant Pfizer. What we're hoping our investors think is this is not only possible, it's probable. Okay, slide 7 is the competitive advantage slide. How are you different from and better than the other options that the customers are going to consider? So answer the question, what if someone else had the same idea and got even more money? How would you still win? So the main thing you need to do is show that you have a sustainable competitive advantage. So after investors see this slide, you want them thinking, these guys are winners. This can be really challenging. Some businesses have a very clear competitive advantage, what's called a moat, because it's like a moat around a castle, protects the castle. Other businesses don't have anything that clear cut, but just do your best to describe what your secret sauce is, what makes your business really special. Now, one thing that happens a lot with entrepreneurs is that they think their idea is super secret and super special, and they end up being afraid to tell people about it because they're afraid that somebody will steal their idea. And that's, that's a kind of a hard chicken or egg thing. If you don't tell anybody about it, you're not going to be able to raise any money. So the only way to keep it completely secret is to get your own money, use your own money to fund it. So if you want to get it funded, you're going to have to tell people about it. And so, honestly, throughout my career and the careers of the Zenagos experts, we've seen very few situations in which it was really the idea that made the difference. Usually it's execution. And so do tell them your secret sauce because you want them to understand why you have a competitive advantage. Here's a competitive advantage slide for Uvenifarm. It has a very clear competitive advantage in the form of patent protection. So we stick that front and center. We're going to be protected from other people copying our drug for 20 years. We're not going to get into the politics of this, but Uvenifarm is going to take advantage of that patent protection. So listing risks can give you some added credibility with investors. It shows that you have nothing to hide. And so we've listed some risks down here. What we're hoping our investors think is these guys are real winners. these guys have a competitive advantage. So we think there's some risks that our clinical trials go in 3 phases in pharmaceuticals. So this investment is asking for money right before the end of clinical trials. It's a great time for a pharmaceutical company because they're just about ready to go make money off that drug. But there could be some disastrous side effect that came out in the clinical trials. The government right now is negotiating for volume discounts that could make things difficult for a pharma company trying to get a new drug out. Possible non-essential designation might result in insurance not approving it. Failure to secure an international patent could hurt our international market. So putting risks like this in, some people don't want to put them in because they think, well, I shouldn't tell them what's bad about it. But if you don't tell them, they'll go Google it and figure it out anywhere, or talk to their expert friends. So you might as well point them out and get the credibility for that. All right. Slide 8 is the team slide. For professional investors, this is usually the most important slide. There's a long-term debate in the venture capital field. Do you bet on the horse or the jockey? That is, do you bet on the company idea, symbolically the horse, or do you bet on the team that will execute that idea, symbolically the jockey? We actually wrote a blog article last year in the Ask Zenagos blog that cited research showing that professional investors value the team over the idea. I think Mavis is going to put that link in the chat if you feel like reading that article. This may be because investors know something's going to go wrong with the idea. Like, you just never can predict everything that can happen, but a great team can problem solve and overcome any challenge that comes up. The main thing you need to do on this slide is include the best strengths of your team members. So after investors see this slide, you're going to want them to think, I think they can pull this off. All right, here's our example team slide. Uvena has 2 types of team members, management team and advisory board members. For the management team, we list the CEO, the chief scientist, and the CFO. Since this is a biotech company, we emphasize their science credentials, the university degrees. Dr. Utsi has experience as a chief scientist. Dr. Shui has run the National Medal of Science, which is also referred to as the American Nobel. Our CFO has experience at Goldman Sachs, but he also has experience at big companies like ESPN and Nike, which, remember back to that other slide, we said that we were going to try to make partnerships with companies like ESPN and Gatorade. And so you need somebody who has that kind of experience. So that gives us credibility there. And then we need some celebrity punch for Uvenix. And so we have celebrity scientists. We have Dr. Sanjay Upton from the Zenagos News Network. He's our medical anchor. And Dr. Tony Auchi, a former Surgeon General. What we're hoping that our investors think is, I think they can pull this off. As a side note, if your management team is missing any team members, you can point out and say you'd like your investors' help in choosing that team member. So let's say that you had a big gap, like you didn't have somebody who had partnership experience. You could say to those investors when you have your stand-up meeting, we'd be looking for some help locating somebody who's, really great with sports team partnerships. If you don't want your investors to choose management teams for you and sort of say you have to hire this person, then you do need to make sure you don't leave any gaps, that you bring a full management team. All right, almost to the end. Slide 9 is the traction slide. It can also be called progress to date or accomplishments or milestones. The main thing you need to do on this slide is show that you've been making good progress on your own. Now, this is a vicious chicken or egg thing. You want to show that you are making progress. In order to be totally safe, an investor would want to invest in a really sure thing. However, if the company could make that much progress without money, it wouldn't be available for investment in the first place. So if you're in a pitch meeting and investors give you that kind of feedback, like, well, you haven't gotten enough progress, don't get frustrated. Just keep pitching until you find an investor who feels like you've made enough progress, because a lot of people will quit when they get to that point. So you want to share any achievements you have or reviews, get some testimonials. I know this is really hard in the beginning of your business. Like, how do you get testimonials when you haven't actually, run the product? If you can't get any of that, talk about upcoming product launches or plans for scaling and growth. After investors see this slide, you want them thinking this entrepreneurial team is really making progress, because they're going to be looking for hints that you can get it done. And last but not least, here's our example traction slide. Pharmaceutical companies have to go through several phases of development. They go through research and then testing in mice. And then we already talked about they go through 3 phases of clinical trials in humans. So Uvena Farm can show terrific progress because we're in that last phase of clinical trials. So we have lots of traction. We can really brag about our traction. We're looking for our B round of investment, which is enough money to go to market. So we're hoping our investors think, wow, this entrepreneurial team is really making progress. We've already completed the research. We have patents. We have already done the rodent model tests at the National Institute of Health. We're very successful. Our research has been published in the famous Scientist magazine and the Zenagos Times. And right now, final clinical trials are starting. So we just need our money to get through those last trials and get to market. And last but not least, slide 10 is the ask and or conclusion slide. This is where you ask for whatever it is that you want. The main thing you need to do on this slide is tell how much money you want and what you would do with it if you got it. So with the judges, you're going to want to be telling them, what would I do with that prize? If I could win that prize, how would it help my effort? After investors see this slide, you want them thinking, I want in. You see that on Shark Tank. They're like, I want in, right? You want them thinking, I don't want to get left out of this. Fear of missing out. After investors see this slide, one of the things that you'll be thinking is, if I had the money, I would have already done this. So when we look at this, we ask ourselves, if I could have $2 million for 10% of the company, could I get the job done? So we're going to say, I want $2 million. That's going to get me to that final phase of commercialization. I'm going to get international patent protection out of that. I'm going to market that first audience, the mobility challenged audience. I'm going to produce product through Q2 of 2025. I need to put a kind of a memorable summary phrase. So I've got invest in a healthier future, reverse the effects of aging. I may not be great at coming up with snappy conclusion phrases. I may have to go ask some of my fellow Zenagos experts to help me with my snappy conclusion phrase. But be snappier than I am and come up with a great conclusion phrase for this slide. So I'm asking for $2 million for 10% of the company. Here's what I'm going to get done. And you don't want to miss out on this. You want to make sure that investors feel like, I want in on this. I mean, honestly, if I really do have the fountain of youth, you want in on this. I want in on this. All right. Let's wrap up with a couple examples, tips, and a quick special offer, and then we'll answer some questions. These examples are in the pitch deck takeaway, and so I'm not going to spend time on them now, but you can kind of look through it. What I would suggest you do is look and go like, which one's the problem slide? Which one's the solution slide? Kind of see what order did they choose? Why are they impressive? Why did these companies get big investments? Just kind of help you with your own strategy to look at other examples. And these final words of advice are also in the takeaway. Make sure you include who you are, why you believe in the idea, what is the potential of the idea, what differentiates you, and what is the evidence that you can do it. Do you have any revenue and customers yet? That's the most convincing evidence. If you don't, what are your credentials? What's your experience? How, why you? How much money you're raising? What would you do with the money? And then photos, diagrams, tables. People love graphs. Be informative, but not overwhelming. No extra slides, like more isn't more. And make sure you fact check. Don't forget that. And before you submit, ask somebody to review and give you feedback. I know, it's vulnerable, but do it. And on that note, Special offer from Zenagos. If you want us to review your pitch deck prior to submission, you can send it to us at pitches@zenagos.com and we will send you feedback and we will keep your idea completely confidential. If you're selected for round 2, Zenagos experts will also provide a practice pitch session for you. So same thing, email at the address above to schedule an appointment. pitches@zenagos.com. Be really happy to help you out. And there's that QR code. I'm going to leave that up for a little bit. And Mavis, have you been tracking the questions as they come in?
Yeah, I've been trying to answer them. I'm not sure how great a job I've been doing, but we have a couple. Okay, so someone asked, you mentioned a business needs to get big fast for it to be really worth it for an angel investor. How big are we talking? Because that'll definitely impact systems organization, etc., and be an enormous strain for folks who are starting out with smaller business. Just curious and thoughts on this. It's come up in a few conversations.
All right. If you still need that QR code, ping somebody in the chat and we'll send you that link again. So the question is, how big? Right? Well, it depends on who you're pitching. For this pitch contest, you know, it's as big as your company is. And so you don't have to make up some other company that doesn't exist. Make up your company and pitch it with your passion, the way that it really is. If you want to go to Sand Hill Road, which is where all of the California venture capitalists have their offices, and you want to, pitch up and down Sand Hill Road, which, which we have each of us done, those people have a different set of expectations. And, if you want to pitch to a venture capitalist, you're going to have to come up with an idea that is, the kind that they do. Mavis wants to comment. Go right ahead.
No, that's okay. I'm getting ready for the second question.
Oh, but there are angel investors for every size of company. And so, and there are investment levels for every size of company. And, there are micro lenders who lend, from $100 up. And so pitch your idea the way that it is, and just kind of have that investor mindset in your mind as you do it. What do they want? How do they think? It's helpful.
Thank you, Karen. I agree. And, just for our members, I would encourage you to submit. Most of our members are still a company of 1 or 2, which is okay, right? And so please don't be intimidated that, I need this whole team behind me and everything needs to be buttoned up. Please, I encourage you to submit. Our judges are really looking for, okay, what are you going to utilize the money for? And so you need to convince them that if you are to win first place, $5,000, that they're going to get a return, right, of their investment. Mm-hmm.
Right. And maybe, making a pharmaceutical company is a little bit of an overblown example. Like, maybe next time I won't be quite so creative.
Okay. Are you ready for the next question, Karen? We have a few more minutes.
Bring it.
Okay. So this is a question about product versus services business. So we'll be curious to hear how product versus services businesses, especially in scalability, in terms of scalability or growth expectations. And then the follow-up to that from Jesse is, what are some of the key differences you'd highlight for services businesses? And what about for B2B service businesses?
I think you want to answer that one.
Well, I already tried in the Q&A. So generally speaking, investors prefer to invest in product-based businesses because they can scale more rapidly and more efficiently than services businesses, which inherently, theoretically anyway, you would need to increase headcount as you scale the services business. However, certainly I've actually been part of 2 services businesses that got venture funded. So you can find investors who will invest in services businesses. Generally speaking, I'd say that your multiple for your valuation, so whether the investor is going to get 2x times revenue as a valuation or 10x times revenue as a valuation, it's going to be on the lower side for a services business, just because of that headcount challenge.
Good.
We're
Well,
good.
if that's the set of questions, so I think the first question was a good one, that it kind of set out, how big does this need to be? Some pitch decks have been very convincing with just sort of 3 or 4 slides. Just since it's written only, make sure that you put what you want people to know on the slides, because you won't be there to talk to them. So in some of those examples, hopefully you'll see some formats that you find helpful. And if you have any question whatsoever, feel free to link with us. We're happy to chat with you, and good luck.
Yeah, good luck, everybody.